Okay, guys, so welcome back again to the BY class where we are going to continue with the accounting equations. So, this is the second session for the accounting equations. So, stay tuned. So, now we are going to the accounting equations and we say, assuming a business is set up. So, I want to start this very part with an example, okay, with a case study or a scenario. So, assuming a business is set up and it was the owner who supplied all the resources. It was the owner who supplied all the resources. And in the earlier video, we were made to understand that all the resources that are supplied by the owner is called capital. Okay, so when the owner supplies the resources, it is referred to as capital. Now, after the owner has supplied the things for the business, now it does not belong to the owner again. Now it belongs to the business. So now it's the resources which were capital for the owner becomes the resources or the property of the business. I hope it is clear. It becomes the property of the business because in general, the business does not have any property. Okay, in general, the business does not have any property. So it is only when the owner brings capital into the business that is where the business now gets what? A property. But in the real sense, the business does not have any property. The property is always introduced by the owner or any other person. So in this case, the owner is the only one who supplied all the resources. So that is capital. But when it gets into the business and they start to use it for business use, it becomes a property of the business. I hope this is clear. So from this scenario or from this assumption alone, we can be able to say that capital is equal to what? Asset. Meaning the resources which were supplied by the owner, which is the capital, is equal to or it is the same as the property of the business. I hope this is very clear. We are dealing with accounting equations, so that's what we are doing now. As simple as that. The business does not have any property. So because the business does not have any property, anything that is supplied by the owner, which is the capital, becomes the property of the business and now which is known as the assets. So the property of the business is called the asset. So anything supplied by the owner becomes a property of the business. Therefore, the owner's resources or the resources supplied by the owner, which is the capital, is equal to the properties of the business, which is the assets. So capital is equal to assets. That is our very first equation. Now let's pick a practical example to see how it is treated. So example 1. Kweku started to operate a transport service by purchasing a motor vehicle costing 10,000 Ghana cedis. Kweku started to operate a transport service by purchasing a motor vehicle costing 10,000 Ghana cedis. So you see, in this case, we are not producing anything, but we are rather what? Providing a service. Okay, we are rather providing a service. So because you are providing a service, we have to get equipment or resources that will help us provide the services. And the business is which is the transport service. The transport service is the business, okay. So the business, which is the transport service, did not have any property. So when Kweku decided to start this business, he said that if that's the case, then I'll purchase the motor vehicle, which will help me what? Run the transport service. Okay, which will help me run the transport service. So Kweku went to purchase the vehicle at what? 10,000 Ghana cedis. Went to purchase the vehicle at 10,000 Ghana cedis. So therefore, the capital which was introduced into the business by the owner was what? The 10,000 Ghana cedis, because that's the money he used to purchase the car or the motor vehicle. Okay, that's the money he used to purchase the car or the motor vehicle, and that is 10,000 Ghana cedis. So now the only property the business have, which is the asset, is what? The motor vehicle. And how much is the motor vehicle? 10,000 Ghana cedis. So now we're getting the concept. So you realize that the capital, which is the resource that was introduced into the business by the owner, is the same as what? The asset or the property of the business. So the owner went to purchase the motor vehicle at 10,000 Ghana cedis, and he brought it into the business, and that is the asset that the business has, or the property that the business have. And how much is it? 10,000 Ghana cedis. So we can say capital is equal to assets. So 10,000 Ghana cedis is equal to 10,000 Ghana cedis. I hope this is very clear. In most cases, people other than the owners also supply resources to the business. This is known as liabilities. The accounting equation becomes, so we are introducing other factors. So in a situation where we are starting a business and it is not everything in the business that was provided by the owner, that means the owner decided to consult other sources. He decided to consult maybe family members. He decided to go for a loan. He decided to go for this, decided to go for that. Meaning he didn't supply all the resources all by himself. So the very moment he didn't bring everything into the business all by himself, the equation is now going to have an additional feature, which we already found out to be the liabilities. Okay, we found out to be the liabilities. So the equation then becomes capital, which is the resources that was provided by the owner, and then liabilities, which is the resources that were provided by the other people the owner went to consult. So when we add the ones the owner brought to the ones that the other people brought, all these things will come together to form the properties of the business. Because when the other people were also in bringing it to the owner for to be introduced into the business, it is no longer going to be theirs, but just that at a point we will be required to pay for it. Okay, we'll be required to pay for it. But because it has been introduced into the business, it also becomes a property of the business. So in that case, the resources provided by the owner, which is capital, and the resources provided by the other people, which we refer to as liabilities in this case, when we add them together, we are going to get the total resources or the total properties of the business, which we call the assets. So the basic accounting equation is capital plus liabilities is equal to assets. Owner's resources plus other people's resources come together to form the resources of the business or the properties of the business. I hope this is very clear. Now let's pick an example in this scenario. So if Kweku contracted, so we are using the same example from the first part where we said Kweku went to purchase a vehicle costing 10,000 Ghana cedis to start a transport service. Okay. So now he went to what? Contract a loan of 2,000 Ghana cedis from the bank, which he opened an account. So he went to contract a loan. So he went for a loan in addition to the property he already had now, which was the one he went to use to purchase the motor vehicle. Now he went for a loan and he used it to open a bank account. So because of that, the capital, which was the motor vehicle, which was valued at 10,000 Ghana cedis, plus the loan that he has gone for, which is the liabilities of 2,000 Ghana cedis. He didn't use it to open a bank account in his name, but he used it to open a bank account for the business. Okay, it is for the business, not for his personal use. for the business. So that one becomes the liabilities. It becomes, because the loan we are going to pay for it, so it becomes the liabilities. So this one will be equal to what? The total assets of the company. So the motor vehicle, which is valued at 10,000, plus the loan from the bank, which is 2,000. So in all, you see, we will come to the same understanding again, that 10,000 plus 2,000 is equal to 12,000, which is capital plus liability, 12,000. And then the properties of the company or the business, which is the assets. And in this case, we have just two assets at the moment: motor vehicle valued at 10,000, and then the bank also valued at what? 2,000. Then these two also come together to form the 12,000. So capital plus liability is equal to assets, still balancing. I hope this is very clear. Yeah, so in short, the relationship between capital, liabilities, and asset could be expressed in the following. So let's look at the ways in which we can express the three items we've just mentioned. So asset is equal to what? Capital plus liability. In other words, the properties of the business is equal to the resources supplied by the owner, and then the resources supplied by the other people. So in a situation where we don't know of the value of the capital, we can generate a different equation just by doing change of subject. So the second equation we can derive from the first equation is capital is equal to assets minus liabilities. So you see, the assets, which is the properties of the business, is the total of the owner and then the other people. So if we want to find that of only the owner, we have to subtract the one which was generated or introduced by other people from the total to be able to get that of only the owner. That is the same way, if you want to get that of the other people, we will have to subtract the owner's capital from the total to be able to get that of the other people. You see, this is very easy. That is accounting for you. So this is what we refer to as the accounting equation. So also soon we've come to the end of the topic accounting equations. There will be more practical examples to be treated in subsequent lessons. So stay tuned and don't forget, a day for you. Have a great day and see you in the next lesson. And once again, if you find this content to be very productive and helpful, kindly like, comment with all your questions, share, and then also subscribe so that you don't miss an upload. See you in our next video. Bye for now.